Well, folks, here's to another red day in the stock market. Cheers. I appreciate you guys for tuning in. Let's break down what the heck is going on right now, as every index is not just down a quarter percent, half of a percent. No. We're down pretty much over 1.5% across the board today, and the VIX is up almost 12%. So let's break down what's going on, the charts, my thoughts, and of course, what I'm doing right now in the stock market. But first, hit the like button. Make sure to subscribe here on YouTube. It's free. And join my free email list where I send out my top stocks every single week. That is linked down below. And with that being said, guys, cheers again. I got a double espresso on deck. You're going to need it for this video. I'm going to need it for this video. And let's just get into it. So we are in complete free fall right now. This is actually VTI that I have pulled up. VTI, which is the Vanguard Total Stock Market Index ETF. It is down 1.4% on the day, but forget about VTI. Let me look at the S&P and QQQ, which obviously are within VTI, which I think is the best ETF to own long-term in the stock market, but we'll save that for another video, guys. Take a look. S&P is clearly now dumping under the 50 SMA. We obviously got rejected at the 180 SMA on the 4-hour time frame, like we talked about. And this 30-minute chart, or now let's pull up the 1-hour chart. Do you guys remember we were holding that channel, right, on this time frame? Well, we're no longer doing that. We're falling through this, this channel. We're taking out the lows pretty much. We're at the lows, actually, from about a week ago, last Friday. So this is not good. What did I tell you guys? I told you if we fall through the moving averages and we take out this channel, technically speaking, it's not going to be pretty for the markets. And that's exactly what we're doing, not only on SPY, but on QQQ as well. I mean, look, we're now clearly falling through this channel. We have a death cross on the 1-hour time frame. This is not pretty. And the tariff uncertainty is real right now. April 2nd is around the corner. You guys know, I mean, what is that, on Wednesday? So we're less than a week away from that. That's going to be big. There's just a lot of uncertainty going on right now, guys. And now the Nasdaq's almost down 2%. Insane. S&P's down 1.5. The Russell's down 1.8. And we have the Dow. The Dow's down 1.2%. So let me show you some news we got today regarding inflation. I'll pull this up. This article here from CNBC. So we got the PCE data, and we can see core inflation, excuse me, guys, in February hits 2.8%, higher than expected, and spending increases 0.4%, which is less than expected. We'll talk about that in a second. So the Fed's key inflation measure rose more than expected in February, while consumer spending also posted a smaller than projected increase. The core personal consumption expenditures price index showed a 0.4% increase for the month, the biggest monthly gain since January 2024, putting the 12-month inflation rate at a whopping 2.8%. Which honestly, that number, you might look at it, you're like, all right, that's not too crazy, right? It's come down. Yes, it's come down, but inflation is persistent, right, guys? And it came in higher than expected. Economists surveyed by the Dow, or by Dow Jones, had been looking for respective numbers of 0.3% and 2.7%, which again, it came in at 0.4 and 2.8. So it came in hotter than expected. And core inflation, which you guys, I'm sure all of you know, but if you don't, it excludes volatile food and energy prices and is generally considered a better indicator of long-term inflation trends. And in the all times measure, the price index rose 0.3%. or the all items, measure. It rose 0.3% on the month and 2.5% from a year ago, both in line with forecasts. But the reason why the market, well, at least one of them, the reason why it's selling off is because core again came in hotter than expected, and at the same time, the Bureau of Economic Analysis report showed, that report showed that consumer spending accelerated 0.4% for the month, below 0.5%. The forecast, right, that came as personal income, posted a 0.8% rise against the estimate for 0.4%. So not as much consumption, right? The acceleration was lower than expected. Not as much consumption there. And I'm looking at this article on the right. Did you guys see Trevor Milton got pardoned? I was reading that yesterday, completely off topic. The old CEO of Nikola. Do you guys remember him? Maybe I'll make a video on that. But he got pardoned by Trump in his securities fraud case, which I don't know if I'm a big fan of that. I think he got 4 years. He just got pardoned. I mean, I would have just let him sit in jail for 4 years. I don't know why he got pardoned. Anyway, completely off topic there, guys. But Trevor Milton, yeah, you guys remember Trevor Milton, 2020, complete fraud. He got pardoned. Either way, so let's see, blah blah blah. Now I'm off top, or I got knocked off topic here. It looks like this person said here, economic strategist at Morgan Stanley Wealth Management, said it looks like a wait-and-see approach. The Fed still has more waiting to do, no doubt. Today's higher-than-expected inflation reading wasn't exceptionally hot, but it isn't going to speed up the Fed's timeline for cutting interest rates, that's for sure, especially given the uncertainty surrounding tariffs. And the crazy thing is, guys, these numbers we're getting are without the tariffs. Think about that, right? So the real inflation data that we have to pay attention to is going to be in the coming months, if and when a bunch of these tariffs go into place, which, we're going to get some tariffs for sure, but we don't know the whole scope of everything quite yet. So the Fed, this is why the Fed is not taking aggressive action to cut rates yet, and I commend them for that. I don't think they should cut rates aggressively at this point because, well, what if inflation spikes up? And that's the double whammy that the Fed doesn't want to mess with right now. We have tariffs that are inflationary, and cutting rates is also inflationary. So it's like that's a double whammy. The Fed's got to be careful right now. And coming back to the charts here, guys, it's not looking pretty. Again, we're dumping under this channel. We have a death cross on QQQ and SPY on the 1 hour time frame, and a bunch of stocks are just getting destroyed today. We have Palantir back in the mid 80s. It's at $85 a share, down 5.5%. We have Coinbase, which crypto, by the way, is getting killed right now. Coinbase is down 4.5%. We're testing the lows pretty much. We're getting dang close to at least, right? We have Nvidia. A bunch of stocks are getting hit, guys. I was actually about to buy more Nvidia earlier today, maybe just a little bit. I didn't do it yet, but I'll probably throw some cash in my account, buy some more Nvidia today. But yeah, Nvidia is down 1.4%. It's at 109 right now. And you guys know I said, look, I'm going to be buying more Nvidia at 100 to 105 to 110, that range, which now we're entering. I don't want to go too crazy yet because it looks like, I don't know about you, but to me, it kind of looks like we're going lower here. Honestly, I wouldn't be surprised if we went for the lows here. We hit about 101 to 103 about 2-3 weeks ago. I would not be surprised at all if we went and tested that low, maybe even if we took it out. And honestly, guys, if we go down to $100 again, maybe to $90, $95, I'm going to buy more shares for sure. And at that point, I might even consider buying some short-term call options to play the rebound, because at that point, it would just be way oversold and we'd be due for the rebound. Kind of similar to what I did in my last or during the last NVIDIA drop when we got destroyed from 140 all the way down to 102 in a straight line. I bought calls here, played the rebound, made some nice money on those calls, looking to do something similar if we dump even further here. I'm not going to buy the calls yet. It might be premature to buy them now, but if we get down again another $10 per share from here, I might consider it. So that's kind of what I'm doing right now, guys. Not the prettiest day at all for stocks, but you have to realize if you have a long-term mindset, if you're able to look through the noise, right? Pick stocks you love, ETFs you love, this is the best time to buy. I'm not telling you what to buy. All I'm saying is, in general, when stocks are getting hit, right, that's the best time to buy if you have a longer-term horizon. And if you're a short-term trader, anything can happen. You got to realize that. But if you're investing for 5, 10, 15 plus years out, you're going to be good. So let me know your thoughts in the comments, guys. Run the likes up. Don't forget to subscribe here on YouTube. We're on the road to 100K subs. Join the free email list. That is linked down below, and get your 30 stocks for Moomoo. You have less than now 3 days to do it. Deposit at least $100 using that link down below. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash for now will earn up to 8.1% APY. Guys, I'm telling you, it's a no-brainer, and the clock's ticking. Literally, you have less than 3 days to do it, so get on it. Use that link down below, and I'll catch you guys in the next video.